Hey, how's it going, everybody? Mike Weber, your South Bay and Los Angeles real estate broker, here with your real estate market update for the beginning of March 2021. Boy, is the market crazy right now. We are starting to finally see some changes in some potentially leading indicators as to what's happening in the market. But of course, as we've seen, over the past several years, there's no way to tell what's going to happen. We've been in an extremely accommodative environment, both by government intervention and action, as well as Federal Reserve policy, and they've successfully been able to really kind of manage the market and keep the market extremely strong, limit the amount of inventory on the market, and of course, artificially create demand from buyers by driving interest rates lower and lower and lower. Now, one thing that I've been talking about when people were saying already last year that the market was going to crash is that I thought that the government would continue to come into the market and find new ways to create additional demand. And so one of the things that I've heard about, and I'm not sure if it's still in this stimulus bill that's likely going to be passed, or if they took it out, or if they modified it, but one of the things that at least was in there at one point and that they were talking about was giving $15,000 in credit at closing to first-time home buyers to buy a home. Now, this is something that I've been talking about for probably a year or two as something that I expected was going to happen. There's already been down payment assistance programs for a while, but access to them has been limited. There's been, qualification requirements and things like that. From what I understand, this would just be an across-the-board credit of $15,000 literally when you close escrow. And clearly what the Fed and the government is thinking on this is that if the average home price across America is, maybe just under $300,000 or around $300,000, a 5% conventional loan means you need about $15,000 down plus a little bit of closing costs. So essentially what they're trying to do is make it so buyers can get into a home with essentially no money out of pocket. Now, whether or not this will pass or not in the current form, or whether it'll change, your guess is as good as mine. But clearly the goal is to find more and more ways to push housing prices up, to create more and more demand and stimulate the market, and of course, prevent any sort of a correction in housing. Now, that said, we are starting to see a dramatic change in interest rates. And in order to share that with you, I'll jump in and share my screen, and then we'll go ahead and get started. We'll look at what's actually happening in terms of median home prices, closed sales, and the supply of inventory, both in Los Angeles County as a whole, and then also in the South Bay beach cities as well. So let's jump right in. All right, so what I want to share with you guys is that in the last month or so, we have seen a massive uptick in the 10-year treasury rate, which is really how mortgage rates are derived off of that 10-year treasury rate. So what we see here is if you go back, roughly a month in time, like for instance, at the end of January this year, as you can see here, we were at 1.01% on the 10-year. Now, just a little over a month later, we've been hovering around 1.5, 1.55, and we've been as high as 1.6% on the 10-year. Now, in just a little over a month, that's a 55-60% increase in the cost of money. Now, granted, 1%, 1.5%, these are extremely low numbers, historically speaking, but that said, they certainly have a dramatic effect on a buyer's ability to obtain financing, to be able to continue to push prices up, make higher and higher offers in the market. And where you see it more directly is now if we take a look at the 30-year fixed mortgage rates in the US, you see here that kind of in 2018, mortgage rates were trending up, and that was really putting a hamper on the market. We were starting to see prices fall in several markets. Rates got as high here as 4.94%. And then all of a sudden, the Fed shifted course. They started to head back towards zero with the federal funds rate. And you can see it was just a steady decline all the way down till just recently in mortgage rates, which of course was incredibly stimulative for housing. And that's why we're seeing such incredible price growth and price gains, out in the market, such limited inventory and such strong demand by buyers, because they're able to qualify for more and more house or more expensive houses than they would have been able to just a couple years ago based on these significantly lower mortgage rates. But now if you see what's happened, end of December, beginning of January, we were down around 2.65. And just like that, in a month or two, we're up to 3.02%. So, a 40 basis point increase. Now out in the market, we're seeing people that were getting rates, around 2.75% just a month or two ago. Now they've trended up to 3.25%, 3.35%, because obviously lenders are anticipating more inflation, more growth in the cost of money that's likely going to be in the near future. So rates don't always, match exactly what we're seeing here on the chart, because lenders are anticipating, what's going to happen in the future, what the cost of money is going to be in the future, so on and so forth. So really we're seeing rates that the average buyer is getting quite a bit above what this chart is at least currently showing. And of course, this is because rates are still rising very quickly, even just in the last few days in terms of the 10-year Treasury rate. So let's go ahead and jump in and we'll look at what's actually happening in the local market in terms of sales prices, supply of inventory, and then the closed sales. Now we'll start out here in Los Angeles County as a whole. And what we see here is that the prices are up 17.8% compared to a year ago at the same time of year. So that means across the board in Los Angeles County, median prices are up almost 18%, which is almost unfathomable. I mean, this is already off of a very high base level of prices. And we did see kind of a little flat spot here where it was unsure what was going to happen. And then sure enough, here we are, and we're already taking off again. And again, this is after a massive, massive spike, unlike anything we've seen going all the way back here on the chart in home prices. And now here we go again, heading upwards. Now, if we look at the month's supply of inventory, we see partially why we're having such dramatic price growth. We're down 18.5% in the supply of inventory in Los Angeles County. And I mean, as you can see here from this chart, I mean, this is where we're at, 2.2 months supply. I mean, it's virtually no inventory on the market. So, it's like panic buying. What I'm seeing is that there's a huge disconnect from buyers and many or most buyers' agents and their understanding of the market and the reality of the market. So you have a lot of people that are out there looking and that are not getting good information, that really don't understand what it's going to take to be able to actually be successful at buying a home in such a competitive market. Now, of course, there's, certain submarkets that aren't as competitive, certain price points that aren't quite as competitive, but generally speaking, across the board, people are going to experience, a very, very difficult market to be a home buyer in. Now, if we look at closed sales, we see that those are up 16.3% year over year. Now, things have been really thrown off in terms of closed sales because of the lockdowns and kind of COVID from last year. So we're not seeing the typical patterns that we would see seasonally. And so it makes sense. I mean, there's no inventory on the market. So anything that is getting listed, for the most part, is getting bought up very, very quickly by buyers. And that's how we're having relatively high closed sales compared to a year ago, of course, with very low inventory because there's nothing left on the market for anybody to purchase. Now, if we move down, we look at the South Bay beach cities where I actually live, we're seeing a slightly less, aggressive price growth. We're up 11.8% year over year in median home prices. Certainly nothing to sneeze about. 12% price growth is still pretty extreme on the back of years and years of 8 to 10, 11, 12% price growth in the past as well. So no sign in prices slowing down anytime soon. Again, we are seeing an uptick here kind of beginning of the year, which is expected as we start to head into, sort of peak selling season. So we'll have to see kind of what happens with these rates starting to trend upwards. Is this momentum going to continue? Or are we going to see another strong year of real estate price growth? Or are rates going to start trending up, maybe get out of the Federal Reserve's control and put a damper on, this insanity that we're seeing in the housing market? Now, if we look at South Bay and we take a look at month supply, kind of similar thing. We're down here, down 5.3%. compared to a year ago. So not as bad as Los Angeles County, but overall still extremely low. 1.8 months is not enough supply. Taking into consideration the average escrow is 30 to 45 days. I mean, essentially, there's barely enough inventory on the market if everything was bought to cover the average period that the homes would typically be in escrow. So that means that essentially, pretty much anything that's listed goes into escrow quickly, etc. And then finally, if we look at closed sales, again, we are up 13.6%. Again, the seasonality of things is kind of distorted right now. And again, since there's no inventory, that means whatever has been put on the market is being bought. So we are still seeing relatively healthy closed sales, albeit in the face of a low inventory environment as well as a fast growing price environment. So yeah, I hope this information was useful. Definitely let me know what's happening in your area. Of course, if I can help you with anything related to real estate, give me a shout. And if you haven't already, click the thumbs up, click the subscribe button. Definitely join me for the next video. Appreciate you guys watching, and I will see you next time.